As business owners, we have so much to think about. Doing the marketing, making the sales, finding the right staff or freelancers and managing the suppliers, let alone doing the actual work. And yes, we went into business to help people and provide a valuable service, but we need to make money. The challenge is always that spending so much time working in the business doesn't leave us much time to work on it. We all need to create CEO time, to look at our direction and plan, our strategy, but also to focus on the money you need to make your vision a reality. To take time to properly review your spending and understand exactly where your money goes each month, to see if you're in control of your money or if it is in control of you. Even if your business is earning good money, it can often feel like the cash never seems to be in the right place at the right time. And there's nothing more stressful than cash flow headaches, which make it so hard to live your best life. I truly believe that happiness is for now and not a dream for the distant future. Being in control of your finances plays a huge part of this. When you get your money to work for you, you can fill your life with experiences and things that matter to you. You can spend more time with the people you love doing what you love, but it can feel overwhelming. So where do you start? Here's my top 5 tips to help you get the most out of the money that you have. Hi, I'm Claire, money coach and qualified financial advisor. For the last 14 years, I've been working in the financial services sector and I run a successful financial services business. I'm here to help you walk into wealth, enriched, empowered and excited. I've built my dream life and now I'm going to help you build yours. And remember, if you've got any questions, post them below because at the end of each video, I answer one viewer's question. Okay, so here are those top 5 tips. Number 1, know your numbers. It's essential that you know exactly how much money you have coming in and going out of your business each month, so that you can plan, grow, and avoid the pitfalls faced by so many business owners. This doesn't have to be complicated, just write down everything that comes in and goes out. You can use spreadsheets or accounting software like Xero or QuickBooks, but honestly, a piece of paper and a pencil will do the job just fine. Start by listing out all of your income from all sources, regular, contracts, or ad hoc work. Is any of it predictable? Write down all your outgoings, rent or wages, internet, memberships, that sort of thing. Regular payments are usually top of mind, but it's easy to overlook the one-off things, like annual technology subscriptions renewing or the cost of thank you gifts you send to your clients at Christmas. Go back over your bank statements for the last 12 months and check you've not missed anything. Now you've got everything written down, deduct your fixed operating expenses like rent and staff costs from your income. This then gives you a figure that you can spend on your wages and any other discretionary spending. Take out your salary next and only spend what's left on marketing and Facebook ads or a new laptop for networking events, etc. That way, you always make sure that you get paid. And then keep reviewing your spending plan every 3 to 6 months. Not only will this help you check you're not spending more than you bring in, but it'll also alert you to the things that you pay for but never use, which have got a tendency to creep up and can really start to mount up over time. Tip 2. Pay yourself a fixed salary every month. When we start our business, the biggest challenge for most of us is managing the irregular income. You could earn £800 today, nothing tomorrow, £500 the day after, and then in 3 weeks' time £1,000 comes in. How are you meant to budget for that? One key thing here is to have a separate account for your business. If you're a sole trader or a partnership, this can be a normal personal bank account. So if you don't already have a dedicated business account, either open a new one or dig out the paperwork for an existing account that's been sitting there for years with £4 in it that you've never got round to. If you have a limited company, you'll need to open a dedicated business account, although I'm sure you already know that, because your company is a separate legal entity to you, even if you are the only director and shareholder. Once you have your dedicated business account, set up a standing order for a fixed amount of salary to your personal bank account every month. The main thing here is consistency. It's always better to pay yourself £400 every month than to do £500 one month and £300 the next. This means you build a surplus in your business account during the good months, and if you have a quiet month or go on holiday, there's still money there to pay your salary. If after a few months your revenue is growing and there's a surplus of cash in your business bank account, put your standing order up a bit. Leave it again for a few months and then put it up again. The key really is consistency. Okay, I'd love to know if you create CEO time for yourself. What do you use it for? Please let me know in the comments below. Tip 3, save for the important things like your tax. You know how as an employee you're on pay as you earn, PAYE? Your tax is taken out of your pay before you get a chance to spend the money. And that makes a lot of sense. And you can use the same principle as a business owner to avoid that panic when your tax bill is due, but you don't have enough cash to pay it, which is such a horrid feeling. Transfer the money to pay your taxes out of your account as it comes in, before you get a chance to spend it. You can easily set up a linked savings account to your business account. Aim to transfer 15% of your gross income in from your clients, plus the VAT if you're VAT registered. If you wait until the end of the month, or worse, when your tax bill is actually due, you may well have spent the money on something else. Your day-to-day business spending will naturally adjust so that you only spend what's left. Trying to save the money at the end of the month rarely works, but by paying yourself first and transferring that 15% and VAT over into a separate account, you'll have enough to pay yourself and your tax bill every year, no matter what you earn. At the end of the year, if you've got more than you need in your tax account, you can reinvest some back into your business. Maybe on training or mentoring, buying a new printer, or taking a bonus or a dividend for yourself and booking that holiday. Tip 4. Someday you'll want to retire or work less hard. Retirement doesn't have to mean hanging up your boots, pottering in the garden and watching Countdown, unless that's what you want, of course. The world is changing. Maybe you love your work and can see yourself doing something part-time forever. Maybe you'll still draw an income from your business long into your later years. But it's always worth thinking about how you'll fund the gap between your state pension and any savings that you have. Investing in a pension is one option. Your limited company can pay in up to £40,000 per year as part of your salary package, which saves on your corporation tax bill and enables you to build a pot for the future. Bear in mind that company directors are exempt from the new government workplace pensions programs like Nest, so do speak to a financial advisor about setting up a suitable directors scheme. Feel free to ping me a message if you don't have an advisor already, and I can help with that. And I know that retirement might seem like a long way off right now, but the earlier you start, the longer your money has to grow. We're almost there. Keep watching for more tips on making your business money work for you. I hope you're finding this video helpful. Feel free to share this video with someone who you know would love to hear more. Okay, so let's carry on with the last tip for today. Number 5, keep on top of it. Put a firm date in your calendar to sit down and review your money position every 3 months to see if you're moving towards your goals. Can you afford to increase the standing order you pay yourself each month? Are you building up a nice surplus that you can use to pay your wages when you take a week's holiday, or become ill, or have a month where business is slower than usual? Are your pensions and investments on track? Their value will vary over the short term, month to month, but over the longer term they should be moving in an upward direction. By keeping on top of your finances, you're best placed to get out there and enjoy life, while growing your business and building your nest egg for the future. But I know it doesn't always feel easy. If you want me to help you keep on track, send me a message and we can chat about my Magnetic Wealth Programme. Okay, it's time for today's Ask Claire question, which comes from Michelle, who asks, how can I find out how much my pension is worth and when is the earliest I can retire? The answer is you should get a pension statement from all pensions you hold once a year, although some of them are now online and you might need to log into a portal to get them. So if you're not getting updated info, you need to check they have the right contact information for you. Depending on the type of pension, you'll either see a pot value for what we call a defined contribution or money purchase scheme, and that amount should go up each year, or you'll see a predicted income if you've got a defined benefit or final salary scheme. Either way, it should say what your normal pension age is. Most money purchase schemes allow you to take money from 55, but some company schemes can put an age of 60, 65 or 67, and if you try to take it early, they can give a huge penalty. If you're not sure, then ask a professional advisor to help you. I hope this has helped you take one step closer to that life you really want, so keep watching.